Big titles, big roles, but what do they actually mean? I'm Ines Hiraki, and this is From Wall Street to Main Street, breaking down business jobs one conversation at a time. Hello, everyone. Today we have the honor of welcoming Oussama Deziri, who's an associate in corporate banking. He works at BNP Paribas, but today he's not representing BNP Paribas. He's just talking about his experience in the corporate banking industry. Hello, Oussama. How are you
Hi,
doing today?
Ines. I'm good. And yourself?
I'm great. Thank you for asking. Thank you for taking the time to meet me as well.
Of course. Happy to be here.
Perfect. So Usama right here is going to talk to us about his experience navigating the industry of corporate banking. But let's start from the start and actually dive a little bit into your childhood. Did you always wanted to do corporate banking? I don't think so. But like, what was the first job that you wanted to do when you were young?
So, Ines, of course, I don't think you'll ever find a child who's going to tell you, I want to do corporate banking when I grow up. When I was a child, like many other boys, I wanted to become a football player. But then with time, you realize that it's not as easy as it seems. So, uh, I would say going through school, I realized that I liked math a lot. And then growing up, I also realized that I like business a lot. And to me, the finance field was a perfect mix between math and business. And that's what led me to be more interested towards job like in banking, for instance. And with time, I realized that corporate banking and this sphere of the corporate world where we can deal with companies and also make assumptions and using math um, was a good way to mix all of those interests together. So now I didn't know from my childhood that I wanted to go into corporate banking, but definitely as you grow up, you realize that you have some interests, natural interests.
Yeah.
And here we are today.
Yeah. Here you are. And you're not a soccer player anymore, right? But you
Yeah,
figured it out in your free time, right? I suppose, right?
exactly. I still
That's
play, but unfortunately not
professional level, but
professionally.
you're a
But
professional
the
corporate.
passion is always there, though.
Yeah, perfect. That's what matters, right?
Exactly.
Passion. Perfect. So, I suppose did you have like a realization moment in your career where you realize, okay, corporate banking is the thing, or you just naturally follow the path of mathematics, business, finance, and you landed in here, or like you had a defining moment, okay, I actually want corporate banking.
This is a very good question. So I had the opportunity to be able to work while studying at university. And when I was working, I was doing commercial credit. So that is credit for small businesses,
Okay.
meaning if a small business wants to pursue a project like buying equipment or needing a line of credit, they would go to a bank and they would ask their help for that. And I was working on that area. So I was already making credit analysis, financial analysis, seeing how businesses perform and make recommendations. And I was doing that part time while studying full time at university. And then during summer, I was working there full time. And I have to say, I was lucky enough to have this opportunity because it made me realize that this is the field that I'm mostly interested in. And it allowed me to grow. And in this field, there are steps. And so I started in commercial, and then I was able to jump into corporate. And corporate and commercial are pretty much the same in terms of core, meaning credit is credit. When you analyze a company, whether it's a $1 billion company or a $100,000 company, the concept is the same, meaning the core of the analysis is more or less the same. However, the more you grow in size, the more you're going to have complexity and the more you're going to have variables to handle.
Okay.
Yeah.
Okay, perfect. So actually, kind of jump into the next question. I wanted for you to talk to us a little bit about your background. So you told us you had the opportunity to work a little bit in between your academics at university. But can you tell us a little bit more about your academics background? So where did you graduate? Was it target school? What major did you choose? And so if you can share as well about your professional experience, like did you have only this credit experience, or just share with us a little bit about your background?
Of course. So academically, I did, if you know how the Quebec school system works, so we have high school and then we have something called Cégep. So I did Cégep at a place called Champlain Saint Lawrence.
Okay.
It's an English Cégep in Quebec City.
Okay.
And the reason I did that is I knew at that stage that I wanted to go towards finance already and business. And I knew that English is the most important language in that field. So I did that CEGEP in that language. And it then allowed me to be able to apply at University of Ottawa,
Mhm.
where I did my undergrad in finance as well, and I graduated in May 2021. So about 4 years already. Time flies.
Yeah.
And
does.
I'm also pursuing the CFA. I passed level one last year, and now I'm
Congrats.
studying towards level two.
Congrats.
So yeah, I would say that pretty much covers my academic background.
Perfect. And professional, you told me you work part time, the bank, right?
Yeah, so I would say it started with an internship
Okay.
in something called insurance claims department,
Okay.
where it was very administrative and repetitive tasks where you just had to input some data.
Mhm.
But that allowed me to integrate a company, which then allowed me to go towards credit.
Mhm.
And that's what I did. And that's where I realized that I do enjoy more that type of work than what I was doing.
Yeah.
And then the rest is history. I was able to just be able to improve myself, be able to learn more in the job,
Mhm.
and naturally just grow organically towards where I am today.
Perfect. Yeah. So today you're right now, as I said earlier, corporate banking associate at BNP
Yeah.
Paribas. I just want to dive a little bit deeper into the corporate banking industry.
Mhm.
Could you maybe guide us through a day in my life? Like if I want to spend a day with you, exactly what are all the things I'm going to do in that day?
Of course. So I wish I could tell you otherwise, but no day is the same day. Because in corporate banking, you have to be aware of what's going on in the economy in different sectors and be able to be aware of the news and be as proactive as you possibly can. So when I wake up in the morning, usually, of course, I take a black coffee, a
What
little.
time do you wake up?
Uh, I would say, depending on what time I sleep, maybe between 7 to 8:30 a.m.
Okay, that's great.
Yeah, take breakfast.
Mhm.
Then I read the news. I look at the stock market. I try to see if there's any major event that's happened during the day or during the night. And then when I do that, of course, I have a look at my emails. I see if there's anything urgent, anything pending that I have to handle directly. If it's not the case, I just head towards work, open my laptop, and then the day starts. And then that's what I was mentioning. No day is the same, so it doesn't happen too often that you already know in advance what you're going to be doing that day. Sometimes you have the ability to predict and to plan. Sometimes you have something that comes out of the blue.
Mhm.
So it's really about having the ability to work through these different scenarios. But again, it's really all about being aware and alert about what happens around you. And most importantly, in corporate banking, sometimes you tend to cover a specific sector and specific clients. And so you have to be aware of what's going on in that specific sector or client frame. Um, yeah, I would say that pretty much.
Okay, and what about the evening? What time do you finish work approximately? Do you have time to work out? How does the day go until the time you go to bed?
So that's what I was saying earlier. Sometimes you're able to finish at like 6 p.m. and go have a nice workout session, have good dinner, see your friends, and do activities, be social. Sometimes it's not the case. Sometimes, mostly when there are urgent things happening, you can find yourself staying late until 11 p.m. or midnight at the office, which is part of the job, and you have to be willing to accept it. Um, and in those type of days, of course, you don't have time to do any other thing than
Yeah.
just focus on work. However, I would say it's very important to, even if you have a long day and you expect to finish around 11 p.m. or midnight, to find that hour or 2 hours during the evening where you can just disconnect, do something else, whether it's gym, whether it's watching something, and then go back with a fresh brain to do whatever work you have to do.
Okay.
So yeah, I would say this. It's hard to describe a typical day,
Yeah.
but what I just mentioned, I would say covers 80% of the whole corporate banking job.
And once you step a foot out of the office, do you still think about work or like it's done?
I would say you have to be alert, like I was mentioning earlier. You have to set up some notifications on your phone so that if a news comes up, you're looking at it right away. So your brain is never totally outside of work. However,
Okay.
you're still able to disconnect a little bit. Um, so I would say on that stage, you're more on a reactive basis, not on
Okay.
a proactive basis.
Okay.
But no, to answer your question, you're never 1000% outside of work in
Okay.
terms of brain. But yeah, it's part of the job. But you have to like it. You have to be, in a way, passionate about it so that it comes naturally and it doesn't feel like it's draining you, but more driving you instead.
Okay. So we talked a little bit about like what goes through your day, but let's dive more into corporate banking. Let's give you a situation. We are at a party, okay? We just met. We just like started talking, and I ask you, "What do you do for a living?" You tell me, "Oh, I do corporate banking." And I ask you, "Okay, what is that?" What's your answer to that?
I would say Excel and numbers, and that's it. I'm just kidding. Um, I would say corporate banking, you just help companies um, fund their needs, whether it's short term needs, whether it's long term needs, if they want to acquire another company, if they want to expand to a new country, for example. They go to a bank to help them from a funding perspective and sometimes on an advisory perspective. Maybe at a party, this answer seems a bit too long and too dry, but I would try to simplify it as much as I can.
Okay, and like for example, there is a lot of people that choose a finance path. They're like, okay, I want to do investment banking. I want to do investment banking. Everyone thinks that when they're majoring in finance. I think like most of your friends in high, like not in high school, like in university did too, right? So, what is the main difference in between investment banking and corporate banking?
So it's a very good question. And I would say investment banking is definitely the most glamorous term that people hear. Um, I would say corporate banking and investment banking, although there could be a lot of overlaps in terms of technical skills that you need, the main difference is in investment banking tends to be more transactional. So you have a deal going on and you have to handle it and uh, make sure that it goes to the finish line. Also, investment banking, there's a lot of different spheres. So you have M&A advisory, you have investment banking that helps clients who want to go public. They help them go through the IPO process or to underwrite something. Either it's a new bond in the market, either it's offering new stocks in the market. So it's very large. Corporate banking, like I mentioned, there are some overlaps, but you tend to be more on the ongoing monitoring of a company. So usually you tend to have clients. You want to respond to their needs. So if they want a line of credit, for example, or if they want a new term loan to acquire something or to do any type of project, then as the corporate bank, you help them do that specifically, but also you are there as a safeguard of the bank. So
Okay.
each year you have to perform some annual reviews. Each year you have to, or each quarter you have to make sure that when the client releases their financials, you look at them, you make sure that everything is okay, and if not, how would you adapt to that new
Okay.
situation? So yeah, a lot of overlaps, but there are some different distinctions. In terms of hours, I would say definitely investment banking has the reputation of working a lot of hours. In corporate banking, again, it depends, but you can find yourself doing a lot of hours during the week as well. But I would say maybe a bit less than investment banking.
Okay. So if I understand well, the main differences are corporate banking is more on a long-term basis. You keep your clients in your portfolio and you get not only to work on a transaction specific, but to review things on a long-term basis, so either annually
Yeah.
or quarterly. And with investment banking, it's more the transaction on the spot and there is kind of no follow-up with the client. Like 1 year or 2 years after, it's more like on the spot, I'm gonna help you do that right now. I'm gonna maybe advise you to do it. I'm gonna do the transaction for you, but I'm not gonna be an advisor on a long-term basis for the funds or anything with the company. Is that right?
Yeah, I would say mostly right. In corporate banking, maybe just to put more emphasis on that, the credit side, you're also a bit of a line of defense for the
Okay.
bank. So, like I was mentioning, you look at the ongoing performance of clients and you make sure that they are performing up to plan. And then, of course, you have the live transactions that happen along the way as well. Uh, so that would be more focused towards corporate banking.
Okay.
Then investment banking, like you just mentioned, it's transactional. Usually, you can have a relationship that lasts with time, but it's gonna be active only when there is an actual
Transaction.
something going
Okay.
on. Yeah.
And so, in corporate banking specifically, what type of services do you offer? I've heard there is like something more annually, and there is something more when the deal is happening. Could you tell us a little bit more about the different type of service that you offer?
Yeah, of course. So I would say rather than services, it would be products.
Okay.
The most common product that all companies have is something called an RCF, which is a revolving credit facility. A revolving credit facility is something that is comparable to a credit card that
Okay.
any of us could have. The principle is the same, is really a line of credit that clients can use to fund short-term needs or to have it as a backstop for any other thing that they are doing on the side. But really, it's a short-term type of funding that is always there, always present, that helps a company have more liquidity as well, that the banks typically offer. And something maybe important to mention is when we're talking about large clients and large revolving credit facilities of maybe in the billions, you rarely have only one bank uh, giving it. In most cases, you have something called a syndicate of banks, where a large group of banks are going to combine their forces together and offer the product on a pro rata basis,
Okay.
so that not one bank is going to assume all the risks, so that if the company performs not well or goes bankrupt, then the risk is being
Yeah.
spread across different
Okay.
institutions. And this concept is very important in the corporate world and even in the investment banking world, is the concept of syndication.
Okay.
Um, yeah, the other type of products, the most common ones, I would say, you have something called a term loan, which is, again, the same way as you and I could go to a bank and ask for a loan for buying a car or whatever. It's a term loan that we provide a company, and usually there is a purpose. The purposes can be anything, like I mentioned, to acquire a new company, to acquire new equipment, to expand into a new country, or whatever reason. So this is something that on the corporate banking level we can offer. Then you have a bit of a more complex area, which is the derivatives. So clients usually, when we're talking about multinational companies, they like to hedge. They can hedge against things like commodities. They can hedge against fluctuation in the forex rates, and they can hedge against interest rates movements. So what we do is we offer them also products that help them hedge those type of
Okay.
needs. And the other area that corporate banks tend to offer is something called trading solutions. So it's a bit technical, but we talk about things like factoring or supply chain financing, where we're able to help clients manage their working capital needs. So I would say this covers pretty much the whole sphere of what we offer in the corporate banking world. Then you have other things like cash management and treasury solutions, which is another area. But let's not dig too deep into that for the moment. But that covers pretty much the whole products category that we offer.
Okay. And so I don't know if it's using these products or if using other products or is it just a type of services that you offer, but how do you basically measure that a company is financially healthy and in a good position?
Very good question. So no company is the same. No sector is the same. So I would say there are the basic things that someone has to look at. You have something more on the qualitative side and something more on the quantitative side. On the qualitative side, what you want to understand is, first of all, the first thing you have to do is understand what is the business, what do they do, what do they offer, in which country do they operate, what markets do they cover. Once you have a proper understanding of that, then you can look at the industry and see how the company is located within the industry and if there is a supply chain, where they are in that supply chain. So having those kind of qualitative understanding of the company, and then of course the management, so who are the people behind the company's decisions. Those are things that you need to understand to measure the company's profile.
Okay.
And then you have the quantitative side, where we would be looking at financial statements, we'd be looking at the company's historical performance, and then we look at ratios. From a corporate banking perspective, we tend to be more interested in liquidity ratios, debt servicing ratios, leverage ratios.
Yeah.
Because something important to mention in credit is we tend to be very focused on the downside risk. So as a corporate bank, typically we don't necessarily put too much emphasis on the upside risk because it's not an investment where we would benefit if there is a big upside. But if there is a downside, then the bank could be losing money. And so we want to look at ratios, to look at the capacity of a company to handle like new debt. And then we can work with projections to try to project what's the future cash flow generation of a business. And those are all quantitative factors that allow us to measure the credit wealthiness of a client. And of course, there is a big gray zone area, mostly when it comes to making projections, because it's all about assumptions. It's all about what you think, what will happen in the future. Nobody has a crystal ball, but it's all about making assumptions that you believe make sense and you're able to justify them. Um, I would say that covers pretty much the way of how to analyze a company's wealthiness and credit profile.
Okay. So let's take an example. You receive a new request. Okay. What are the steps or the algorithm that you follow for that new request? Let's say, for example, for a live deal.
Of course, so a corporate bank, when they get a live deal, usually what they tend to be looking at, like I just mentioned, is who is that client? Who is it? Is it a new
That's the
client?
first step.
Yeah, exactly. You want to have an understanding of who they are, and then you want to have an understanding of the what is being requested. So once you get those things cleared, then you can dig deep into the company's profile, the industry. Then you can make some financial assumptions about who they are financially. If and then it comes back to what I was just saying: make those qualitative and quantitative
Okay.
assessments. But I would say the first two steps is to understand the who and the what,
Okay.
and then you go on with your analysis. And at the end of the day, your goal is to make a recommendation. That recommendation is about you saying, I believe we should go with this transaction because of these reasons. And then the reasons include the qualitative factors, the quantitative factors, and also how you expect the future to be for that business.
Okay.
And then usually you present it to committees. So something that you need to have is presentation skills to be able to argue your case because you are a line of defense, but then you have other lines of defenses after you.
Yeah.
And those line of defenses, their job is to, in a way, challenge you to see if what you're proposing makes sense. And sometimes you might have some disagreements. So it's really up to you
To prove your point.
to prove your point exactly and have the proper arguments to justify why you want to go forward with this transaction.
Okay. So you talked a lot about when doing the analysis, comparing the quantitative side and the qualitative side. Um, can you give us an example of when, for example, the quantitative matters more or the qualitative matters more?
Of course, for when the qualitative matters more is when you have maybe a very new business that has not much history,
VC?
like a venture capital company, which we don't tend to cover that much
Mhm.
in this corporate banking world sphere. But I would say then the quality of the management and if they have any history of performing other type of businesses like the one we're looking at. Um, then you can look at the industry trends. If you're talking about something completely new, like AI, for instance, you have a lot of companies who want to go there. Then it's more about seeing what are the opportunities going ahead rather than how the company is performing today.
Mhm.
So those are some examples of when the qualitative aspect really matters a lot.
Okay.
Then for the quantitative side,
They matter all the time,
yeah,
right?
they matter all the time. Numbers in a way don't lie. However, when it comes to future numbers, then you can be very creative.
Yeah.
So it's really up to you to have something that makes sense when you present something. Yeah.
Okay. So, in the finance industry, there is a lot of technical words that we hear about. Not only the one that you mentioned, but for example, while studying or even like in the word in general, we hear a lot in corporate banking specifically, GCF, trading comps, recent transaction. Can you tell us more a little bit about what are those and what are their role in decision making and how important they are?
Of course, those are very technical terms indeed, and they are most likely used when you try to make projections about a company. So the DCF one, as the name is discounted cash flow. So as the name says, cash flow, where you try to project what cash flow a company is going to make over a certain future period. And then you discount this cash flow with a WACC, which is a weighted average cost of capital. And when you discount it, it will help you assess the valuation of a company based on that future cash flow that it's going to generate. Of course, there is a whole process when it comes to making those assumptions, and this is a whole area in itself. But the concept of the DCF is really to allow you to get a valuation today based on the future cash flow that a company is going to make.
Okay.
Then you have the two other ones that you mentioned. The recent transactions one, for example, is um, you would look at the market. You would look at transactions that happened over the past maybe 2 to 3 years to find some similar transactions that happened with the one that you are looking at the moment. And you look at multiples. Multiples can be of any kind, but I would say the most common one is something called EV to EBITDA multiple. EV being the enterprise valuation to EBITDA, which is earnings before interest, taxes and amortization, depreciation and amortization. And if you look at the multiples of those recent transactions, it can give you an idea of how the market perceives the value of those type of businesses.
Similar businesses.
Yeah, and then you can relate it to your own businesses. It's very hard to find 100% comparables, but it's up to you as the analyst to see what makes the most sense, and then you can adjust if needed. And then you have the trading comps, where it's a bit easier if you find companies who are trading publicly. Then it's easy to look at the valuation based on the market, how much they are being valued in the stock market, for instance. And then it can give you an idea of how it would occur for your business, even if it's a private business, how it would be trading compared to those trading comps. So sometimes it makes sense to use DCF, but if you have a company like mostly in the tech space, for instance, very hard to predict the cash flow generation. Sometimes it's also negative free cash flow for over a certain period of time.
Mm-hmm.
Then those two other methodologies could make more sense. But again, sometimes you have to be a bit creative. Sometimes you have to combine a lot of methodologies. Sometimes you have to get rid of some. It's really about having the ability to understand what makes the most sense, and most importantly, to argue and be able to justify.
Okay. So if I understand well, what are those tools? Basically, it's tools to make projection about the future, either cash flow or the future value of a company in general. One of them, like DCF, so discounted cash flow, used the assumption based on the market, based on the news and everything. Like it's really depending on the company itself, not really comparing to other. But the two other tools are comparing companies with others to have like kind of a value depending on the market and what other people are doing. So there is no right answer actually. It depends on what everyone thinks and what are the processes on.
Exactly.
Yeah.
It's the gray area, which
Okay.
personally I thrive in. I like working in those kind of areas where you can
You can be right
really
and you can be wrong.
exactly, yeah. And then it's really about you to make up something that makes sense. And if we make just a small parallel with accounting, for
Hmm.
instance, where usually you have to look at numbers, balance numbers, and make sure they make sense. Usually it's more concrete, it's more tangible in terms of data that you have because it's things that are in front of you. In the finance and most likely in the corporate banking or investment banking world, you have more of a gray zone in terms of what you can assume, what you can project, and
Yeah,
yeah.
yeah. It just made me think of an example. For example, the CFA dinner at Ottawa this year, the
Mhm.
forecast dinner. There was like a quiz of forecaster. They made some assumption in January about what would be, for example, the price of the Bitcoin, what would be the result of the election, like just multiple assumption. And so they based their analysis on multiple factors. and at the end of the day, like it was in April, they say who is the winner, like they each give like what are the answer. And so all the forecasters say, okay, so this one was the closer to the price of the Bitcoin, for example, today. And so those assumption could be right and can be wrong. It depends, like,
Of course,
and
yeah.
all of these individuals are all talented and experienced, and multiple of them have won in the past or will win in the future. But sometimes it's just like you
Of
cannot
course,
predict the future.
yeah.
Who could predict the the taxes, like the tariffs of Trump's and everything? So sometimes it's just assumption. And
Of course, and sometimes you might as well just select randomly something and you'll be right, while if you
yeah,
spend hours trying to analyze it, you will be wrong. So
yeah,
there is never a clear or right answer that you can know beforehand, but it's part of the job and you have
yeah.
to be still willing to do it.
Yeah, of course, there is risk and you're
Yeah.
willing to take it. So, for example, in what scenario or situation would you prioritize, sorry, RV's relative value over discounted cash flows or DCF?
Yeah, so like I was mentioning, if, just to give you an example, a company is projected to generate negative free cash flow over the next 5 or 7 years, it's hard to use a DCF because a DCF per se assumes a positive cash flow generation. So then it could be a bit useless to use it. And then those other valuation methodologies could come into play
Okay.
and have a better utilization of the concept. Um,
Okay. And so there is, like we talked about a few technical words, we especially talk about tools here. There is another tool that I hear a lot in corporate banking. It's LBO, so leverage buyout. I just wanted to have your insight about it. So if you can like make us like get to know a little bit more what it is.
Of course, LBOs is a specific sphere of the corporate and investment banking world. Just to give you a brief summary, it really relates to usually a private equity fund who seeks to acquire a company using a lot of debt. So the term leverage is really when you use a lot of debt to acquire a company. And something technical important to understand is that the debt is going to be raised at the acquired company's level. So the debt is not going to be held by the private equity fund, but really by the company that is being bought.
Okay.
And the purpose for the private equity fund, sometimes they have different expertise. Maybe it's a restructuring, maybe it's just finding more synergies. The purpose at the end of the day is to hold this company for a certain period of time, be able to service the debt that is being raised, for the purpose of improving the company's performance and be able to sell it back in maybe 3 to 5 to 7 years time frame
So
at a
private
profit.
equity.
Yeah, at a profit. Yeah,
Okay.
and they can sell it either to a private equity fund, or they can, in the best case scenario, sell it through an IPO process. So they bring the company public, and or they can just sell it to another large company. So the sale process really depends on a lot of
Yeah.
a lot of factors, but the principle is really to acquire a company using a lot of debt, restructure or improve the operating profitability of a company to
Make a
then
profit.
sell it at a profit.
Okay.
And some of the other things that happen in the LBO sphere as well is maybe a company is currently public and it's not doing too well, then a company like a private equity fund could acquire it, bring it private,
Yeah.
restructure it, and then
And
put
then
it public
resell it.
again. Yeah.
Okay.
Yeah.
Okay. I'm also wondering what are the biggest challenges that you face when working and dealing with really large clients?
So dealing with really large client is sometimes you have too much information. And when you have a lot of information, you have to be able to know where to look. And sometimes you have a transaction that is very limited in terms of deadline. So if you have 1 week to give back a transaction and it's a very large client and a client that is new to you, then you have a lot of resources, which is a good thing, but also a bad thing because then you have to distinguish which part is good, which part is useless. And this is something that relates to a book that I've read recently. It's called The Signal and the Noise. So, and mostly now with all the things going around, you have to be able to distinguish between the noise in the market, the news that are just noise and nothing more, and the actual signal that have meaningfulness
Okay.
for you when you want to pursue a transaction or something like that. It comes with experience, it comes with guts sometimes, but also when you read through 300 pages reports, you need to be able to know where to look. And you
Yeah.
have to, in 1 hour sometimes, go through the whole thing. Of course, you can't read the whole pages in 1 or 2 hours, but really your goal is to use Control F a lot to find the keywords and also to know where to look and to find the only relevant information that can apply in your situation. So I would say one of the biggest thing when you work on such clients with a limited deadline is to know where to
Notice
look
the
and to
noise and the
exactly
signal.
to
This,
get rid of the noise and only
yeah,
keep what's truly
the
matters.
signal.
Yeah,
Yeah, this makes me think actually a lot about AI. So I suppose this could help a lot to prioritize important information and get rid of like unnecessary information for the case. So I was wondering what would be the role and the place that AI takes today in the corporate banking industry.
of course we're still at the early stages of AI, and I think in the future it's going to be more and more applicable and more present in our daily lives. I think most large companies, whether it's banks or other type of companies, they are trying to integrate AI into their operations to be able to improve processes, maybe reduce errors, and just optimize the work in itself. Of course, banks are involved in that, and again, I think we're still at the early stages, and there are a lot of potential for AI. And when you look at the market, there's a lot of investments being made towards AI for many companies. And I think it's a reality that we have to be more and more
Welcoming.
comfortable with. And the sooner we embrace and are able to integrate those tools that are supposed to facilitate our work,
Yeah, the
then
further
the
we'll
better
go.
it is.
Yeah.
And you can also focus more on the actual strategic tasks and less on the mundane or repetitive tasks.
Yeah, administrative tasks and everything.
Yeah,
Could facilitate the work, make people more productive.
exactly. That would be the purpose. But again, I would say we're still at the beginning. I think if we have this same conversation as we are today, 5 years from now, we could have different opinions,
Of
or
course.
we would be in a completely different state of the world. But it's always important to be aware and to be alert about what's going on and always try to stay ahead of the curve.
What's something you struggled with early on in your career and how did you overcome it?
Of course. So I don't know if struggle is the right word, but when you're in a workplace and when you integrate a new environment, it's important to be able to be pragmatic and be versatile because you will have to handle a lot of different personalities, a lot of different colleagues. So it's important to know how to manage everyone's expectations, know how to communicate with people, and be aware of this really human perspective of things. And at the beginning, it could be challenging, mostly when you just enter the corporate world. But I would say it's one of the things that the sooner you have it and the sooner you manage this type of skills, the better it will be for your career overall. So, besides that, I think everyone is going to encounter the same issues. Maybe sometimes you can make a mistake at work. Um, Nobody is immune from mistakes. And the important thing is to not let it affect you too much
Mhm.
and really try your best to learn from it and try to not make it happen again, of course. But really, I would say making mistakes, mostly when you're starting your career and you're still a junior, it's very important to learn as much as you can from those mistakes and not be scared or not try,
To avoid them.
yeah, to avoid them to at any price. Taking risks sometimes is good, calculated risks, of course. And the important thing is at the end of the day to
You
be
have to learn
able,
from it.
yeah,
Yeah.
exactly.
Okay. I want to dive a little bit more into the news section, going on like everything that is happening in the world today. For example, right now we're in Canada, we have the election going on, but we're also impacted by Trump's decision, multiple things going on all around the world. So I'm wondering how this type of um, information and how this type of change affect your current work.
Well, I would say it wouldn't only apply to me, but really to
Yeah.
the whole world in
Industry,
general.
yeah.
Like I was mentioning earlier when we were talking about the signal and the noise, about that book, I think now more than ever it's important and it's
Yeah.
very applicable. Um, Being alert is very important, and being proactive and also reactive to some extent is helpful. And there is no secret, there is no magic formula. It's sometimes you do something, you have to follow your gut. Sometimes it ends up being a mistake. Then you just need to, like we were just mentioning a couple of seconds ago, um, react in the appropriate way to adapt your approach to this current context. We never know what's going to happen tomorrow or 5 years from now, but from a credit perspective, it's about assuming different types of scenarios and be able to see that in which scenarios would a bad outcome happen, a good outcome happen, and then it would make you feel more comfortable about what you as a person or as an industry or as a company are comfortable pursuing or not. Um, Stress testing is a very important part of all banks, and now more than ever, I think it's very important to be able to see what's the capacity of whatever company to um, take on like some of the headwinds that could happen from the market. Yeah.
Do you have an example of a specific event that happened recently, all across, like internationally, that kind of changed actually the way you like you first of all do your strategy a way that it has to be adaptable and flexible to all situation. But did something happen recently that changes strategy that you previously have, and what could that be?
I mean, when we talk about tariffs, when we talk about all the geopolitical tensions that happen in the world, whether it's wars, whether it's availability of raw materials, I couldn't pinpoint a specific event per se,
Mhm.
but all those events combined, you have to be aware of them. That's the
Yeah,
most important thing, and also to understand them.
how they can impact your current strategy and
Exactly, because each sector can react differently, and some sectors can benefit from this situation, while others could be the opposite. Just to give you a very basic example, but let's say in the US, a company who produces steel is most likely to have more demand from US companies who previously were importing a lot, maybe from China or maybe from
Mhm.
other countries. So this is a good thing for a local company who produces something that it then can sell to its local market
Mhm.
versus a company who is dependent on exporting to other countries,
Yeah.
maybe the US, and then who's going to find itself have less demand because of those announcements.
Okay.
Um, so it's a very dynamic market. It's a very dynamic uh, world where you have to again be pragmatic and adapt.
And so this type of events, could they change the complete decision? For example, let's say you decide to fund a company, but then something happens like a tariff or anything, and then it's changed for a yes to a no or to a standby. Or, like, could this event have like a whole impact, even if the company's financial are still the same? Can just like the political and geopolitical aspect, like internationally, impact the decision making without the financial changing?
It could. There is no implication when we're talking about a new transaction. The bank has could orient to go towards one way and then with time decides to go the other way. As long as there is no contractual obligations or a liability, then the bank is in a position to be able to decide what to pursue. But then if there are contractual agreements and
Mhm.
contractual obligations, then it's a different case. So let's say if you entered into something 2 years ago and then something happened, something bad happens years after, depending on how the contracts are made,
Mhm.
as long as there is nothing triggering the need for legally triggering the need for a bank to just get rid of that investment or just to um, step back from it, then it's a risk that you took and you have to
Yeah,
assume it. And
exactly.
it's all about making sure that you minimize the potential impacts
Okay.
from that. And banks in general are around the world. They have a lot of regulatory uh, things.
Yeah, due diligence.
Exactly, and you have to put reserves aside when you take into when you lend money to a company. So there are a lot of things in the background that happen to make sure that we avoid another financial crisis like in 2008 and
Yeah,
2009, for
the
example.
crimes.
Yeah.
Yeah. Yeah. So I think we really like navigated through the corporate banking world and industry. We went through different aspects, tools, services, and clients, and all different types of factors and strategy. Now, to conclude a little bit this episode, I just want to dive more into the advices that you could give to the people listening to us today. So either students or other professionals. So, for example, what advices would you give to someone who wants to break into corporate banking at an early stage of their career?
Of course. So I would say something very important is when you go to university and when you have that typical academic path, it's important if you truly enjoy the field to find third party sources where you can enhance your knowledge. I personally did a lot of courses through platforms like Coursera or Udemy, which were helpful in enhancing the knowledge that sometimes you will not get to the fullest at university. And then you can really pinpoint what type of sphere in the finance world that you want. So I would highly recommend young students who want to integrate this world, whether it's corporate banking or investment banking, I think it applies for both, to have the initiatives to look through other sources to improve their knowledge. And nowadays, with internet, with Wi-Fi, you can pretty much have access to anything.
Yeah.
So I think it really comes within the person to have that willingness to do it.
Mhm.
Um, yeah, and also what I would recommend is to network a lot, send messages to people in LinkedIn, not take personally when someone doesn't answer you or when someone answers and then stops answering. Never take it personally.
Yeah.
Just keep hustling, keep texting people, and keep
Don't harass them though.
without harassing them, of course, up to a certain extent. But um, it's never too soon to network.
Yeah.
So as a young student, I think those are things that really can distinguish you and make you more appealing for this type of job, because the competition is fierce, and sometimes when you get 100 CVs for one job, you need that something that differentiates you from
Yeah.
the others. It could be the things that I just mentioned, but also let's say you perform sports at a high level or you have any sorts of hobbies, then it's also something that you can put uh, in front of the CV to
Yeah.
show that your
You're
world
special.
exactly.
Maybe you should have networked with the soccer players and you wouldn't be here today.
I don't know, honestly.
I
I
don't
don't
think
know.
it's the same way it works there. Yeah. But yeah, thank you very much for this advice. That's a very good advice to go beyond the classes and the professor at university and extend your knowledge and what you learn to other resources. So through internet and like sometimes there is like really good professors from really target schools that give those courses and you can get straight to the point in a specific area that you want to focus on and a
Exactly.
skill that you want to develop.
Yeah.
So this is a really great thing, and there is like thousands of certification and courses online that people have access to. Yeah,
Definitely. And I would say having that certification from those kind of classes is not the most important. Really, it's
mm.
the knowledge that you get
Yeah,
from them that really matters. Because that's what can help. That's what can help you, for example, in a case study
yeah,
or any interview process that you might take.
yeah. At the end of the day, like if you have all these things on your resume, but in a conversation, you doesn't really know what things means. It doesn't really matter. So yeah, you're right.
Exactly. Yeah.
I'm also wondering if there is like a small habit or something that you got used to do that really helped you navigating your career and helped you improve.
Of course. So I was talking about sports earlier and about football. So I think it's very important, no matter what you do or which level you are at a company, but to have those type of activities or hobbies that can put your mind away from work for at least a couple hours, because it makes you more productive afterwards, and also it's good for your mental health
Okay.
to do it. So in my case, I tend to be more oriented towards playing sports, playing some music. So
What do
those are
you
the.
play?
I'm sorry,
What do you play?
the guitar.
The guitar? Okay, that's
Yeah.
great.
Um, so those are things really that are good for your brain. They do stimulate your brain, whether it's sports, whether it's playing an instrument, but also they allow you to disconnect
Yeah.
and do something else. And it can be different for any type of person, but the concept I would say is very important. And even as students, to have those things on the side so that your life doesn't only revolve
Yeah.
into towards like
Yeah,
that thing.
but even though like there is skills that improve, you can improve your skills by doing those activities. Like for example, when you do sports, it's in team. You get like to work in team, and you get to develop that
Exactly.
skill. Or for
Yeah,
music, it helps a lot with concentration, and there is a discipline. There is like all these type of extracurricular activities that help you build some other soft skills that you actually will be needing
totally.
at work as well.
Absolutely. And that comes to the point I was saying in the CV, when you put those, usually they can get highlighted by an HR person or
Mhm.
someone or a hiring manager because they see that if someone plays sports a lot, it's a good thing because maybe
Yeah.
that person has a lot of teamwork
Mhm.
capacities to be able to work with other people and everything.
Yeah.
So yeah, never underestimate those type of activities that you can do on the side, mostly at the beginning of your career, to be able to attract
Yeah.
to make you more attractive towards
Yeah, because at the
employers.
end of the day, especially at the beginning of your career, the recruiters that you're looking for your potential, not your experience,
Totally,
because you don't
totally.
have experience yet, but they're looking like what is your potential to grow in their company. So they're looking for those little skills that you as a student or as early in your career, you might not think that's something to notice, but actually it is.
Absolutely. And again, I can't stress enough that those are extremely important, mostly at the
Yeah.
beginning of your career. And the more when you talk also with an HR person or a hiring manager, not having only school to talk about, but really having other
Yeah,
aspects.
break the ice, just to break the ice. Like,
Exactly. Yeah.
so sometimes it's just when you want to network with someone, have a coffee chat or anything, you can just talk a little bit with yourself. Like, yeah, I'm
Exactly. Yeah.
preparing for a marathon or something. Like, it could be like anything. You
Totally.
just break the ice, make the conversation, and sometimes you can have something in common with the person in front of you. So
Absolutely.
it
Yeah.
creates a connection, it creates a link, and so it's just
Absolutely.
something
Yeah.
special to
And you
have.
try to be a little bit funny, a bit
Yeah,
witty, and
exactly.
show
Yeah,
that you have personality as well.
yeah, exactly. You're not just a robot. Okay, this is a DCF, this is an RV, this is blah blah blah. No, you're actually a person behind all that. So yeah,
Absolutely.
that's great.
Absolutely.
I was also wondering, there is a lot of misconception and kind of rumors about corporate banking, investment banking, especially about the long hours. But for corporate banking, they say it's very repetitive. It's very boring. Do you agree with that, or do you have a different point of view?
I guess it's subjective about the boring part, but depending on what you like. There's also another misconception that it's all about Excel and writing numbers on Excel.
Well, when I asked you at a party what it is, you told me Excel.
Oh,
So
it was a joke. It was a
okay, okay,
joke.
okay. If you say so, okay.
I mean, oh, well, Excel is definitely a big part of the job,
Yeah.
and it's like a cockroach. Like it's
A
something that
what?
a cockroach,
I don't know what that
un cafard,
is. Okay.
like something that's been there since the beginning of time and doesn't seem to want to die ever. Meaning, people used Excel decades ago, maybe
Yeah.
1 or 2 decades ago, and it's still being used today.
Yeah.
And it's still a very relevant part of the job.
Yeah.
So, not gonna lie, we do use it.
It helps.
It helps a
Yeah.
lot, but it's not only that.
Yeah.
There's also the industry research. You have to go through different sources, talk to people, maybe talk to people who are experts in their fields.
Mhm.
So this is more of a fun task that is, to my opinion, of course, not boring at all, and it's also stimulating because it allows you to enhance your knowledge and your skills.
Mhm.
The repetitive part, I would also say I tend to disagree with that because each client, each transaction is different. And when you start something, maybe you will have maybe 20 to 30% that's going to be the same as with any other client, but the
All
rest
the rest,
is
yeah,
really,
it's new.
yeah, on a case by case basis. And it's up to you to be able to adapt to that.
Yeah, exactly. So I just have one last question to conclude this episode today.
Of course.
What would you give as an advice to your younger self? Starting your career, starting this journey in life in general, what would you tell yourself maybe a few years
I would tell myself maybe focus on football and play. No, just kidding.
ago? Maybe
Uh,
you would sleep more if you were focusing on football.
definitely,
Definitely.
definitely. Um, to my younger self, I would tell them to we touched it a bit earlier, but when it comes to mistakes, not to see mistakes only from a negative standpoint, there are types of mistakes where you would learn definitely more than if you never did it. And sometimes being too cautious is not good.
Yeah, it's a
So
mistake as itself. Being cautious is a
exactly,
mistake.
exactly. Taking risks, mostly when you're just starting your career, take risks. Seek help from people who have the expertise to help. So uh, be very approachable and be willing to approach people. Don't get too intimidated by people because most of the time, from my experience, even the people who are highly ranked are still very approachable and they are more than happy to take some time for a coffee chat or to guide you through some stuff. So
Yeah.
I would say this is a part that if I would tell my younger self to do is that be even more open on that front.
Yeah. Especially with mistakes, I think the important part is like to appropriate them to you. So like when you make a decision, even if like there is a whole decision process before and you're unsure and everything, once you make the decision you have to be sure about it. Like it's my decision and you have to take accountability and responsibility of whatever happens after. If it is a mistake, you just have to own it to yourself and learn from it, but do not doubt yourself once you have taken the decision. I think that's a really
Definitely.
important
I
part.
absolutely. And just to add one last thing to that is, let's say you have a manager or someone senior to you and you don't ask questions and you don't take a lot of risks. At some point you're going to gain seniority and maybe not having those experiences, you don't learn as much. So making that mistake when you're at a more senior level is going to be seen much more negatively
Yeah,
than making it when you're just starting.
yeah,
And that from a manager perspective, when they expect you to have some sort of background or knowledge when you reach a certain seniority, then they don't like
hmm,
uh, when they're wrong about this.
yeah. Also, I think it's important, like not only to learn from your mistakes, but also from the other people's mistakes. So,
Of
like
course.
other people like you work with, or like other people, just get to know them and get to know what are their mistakes as well. So you make sure you don't repeat them as well.
Absolutely,
Yeah,
absolutely. And I mean, unless you're a surgeon or anything, we're not operating on
it's not that deep,
humans.
right?
Exactly.
Exactly. Yeah,
Nobody's gonna die. Nothing is gonna happen of crazy
yeah,
extent. But you have to realize that, and you have to incorporate this into your mind that it's
yeah.
okay. It's gonna be okay, and
It's part of
just
the
know
job.
how to react to it, and
Yeah.
that's it. Yeah.
Okay. Well, perfect. I think that's a really good conclusion to today's episode. So yeah, we navigated the whole corporate banking industry, went from the different tools, what it is, what type of clients. We gave us some advices. You gave us some examples. We really like navigated through the corporate banking, and I think that that was really informative. And I personally learned a lot. I hope you guys learned a lot too. Thank you very much for inviting us today, taking the time to meet us on a Saturday, on
Of
your
course.
weekend, and having such a great time together. Thank you for everything. Do you have the last word to share?
No, again, thanks to you for this opportunity. I truly enjoyed it. It was my first time doing a podcast, so really good
Mine
experience.
too.
Also, to anyone who is watching, feel free to reach out on LinkedIn. Feel free to reach out for a
He
coffee chat.
answers. He
I do. I
actually
try my
answers.
best. I try my best. Yeah, so always happy to talk to people, either students or no matter who. So yeah, I would conclude with that. And thank you again, Ines.
Thank
You are
you.
very good at your job, so
Thank
that's
you.
nice.
You are very good. Well, thank you for everything, and thanks again here. I'll see you for the next episode. Bye.
Bye bye.